All right, so welcome. As you can see, a new setup here. We are live from Cayman Island, where we spend the week with our mastermind. And it will be a super interesting week because this week we have earnings rolling in. Look at this, Mark. I mean, we have more than 11% of the companies in the S&P report earnings. So how will this affect our positions? What will it do to the markets? That's what we're going to talk about. So welcome to Coffee with Markus and Mark. So if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Mark Hodge. And we talk to you about what's happening in the markets and how we are trading it. So we're trading our live accounts, and we have a lot of trading experience. And it's really odd when I'm not in my studio. I'm not even having my usual spiel.
Hey, it's all right, Markus. We can wing it.
Anyhow, so super interesting here. As I said, we're sitting in a corner. Everybody is sitting there watching us right now, so it's weird to have a live audience and not just look into the camera.
It is a little different. Normally, my live audience is Chip on his sofa right over there.
Yeah, and for me, just the woodpecker. Anyhow, so let's talk about what's happening in the markets and how we're trading it. So this week, super busy earnings week. And last week we had banks kicking it off on Friday.
Exactly. So this week, all about earnings. Friday, earnings kickoff. And interesting start, you mentioned it, Markus, 11% of the S&P 500 reporting earnings this week. And so that's really going to be the focus and spotlight.
Yeah, and it's across all industries, right? Today we had Schwab reporting. Tomorrow we have Johnson & Johnson. We have another bank. Then we have Procter & Gamble. Then we have Tesla. We have Philip Morris.
Netflix.
Netflix. It's not that this week is all eyes on tax or all eyes on banks or all eyes on retail. This week, earnings season is kicking off with earnings across the board.
Sure, nice little mix and a lot of exposure. We'll see how we start the week with earnings.
Yeah. And looking at the economic calendar, there's really not much else going on. We had the Empire State Manufacturing Index this morning. We do have retail sales tomorrow. That might move the markets a little bit, but other than this, we see that the whole week, it's just a bunch of Fed members and a bunch of yellow flag, meaning no reports that are really expected to move the markets.
Exactly. And yes, there's retail. Also, Powell speaking on Thursday. But again, the focus right now is just going to be earnings, really.
Yeah. And so super interesting because today Schwab reported earnings. Let's take a look at Schwab first. SCHW. So Schwab reporting earnings coming in terms of earnings better than expected, revenue slightly down and up 6% right now.
Yeah, traders liking that data, which is interesting with revenue coming in a little bit lower, but a 6% move is significant. It's nice for Schwab.
Yeah. And this is where today, we talked about it in the room this morning. It's kind of an odd day because we have the indices up, so the S&P up now 1.2%, but we also have the 10-year yield up almost 2%.
Yeah, pretty decent move there with the bond market and yields popping higher. And you're right, typically we see that with yields higher, the equity markets are going to be down a little bit, but not the case.
Yeah. The only thing that is down massively today is the VIX. If we switch to a 5-minute chart, we see that, ever since this morning, the VIX, the fear index, has been dropping. So fear has left the building for now.
Yeah, at least for now. And this is about a long-term average for the VIX. So I would say that the drop is significant, but holding up around 17.5 is okay. Just when it gets below 17.5, closer to 13, that's when there's just no volatility.
Yeah, and that's what we have seen here, mainly in September and October, that we are nicely between 16 and 20, and especially for our style of trading where we are selling premium, that's definitely helping.
Exactly.
All right. We also took a few trades this morning.
We did.
We can talk about this. Okay, so let's actually hop over. Oh, do we need to take a look at the Stake Watch tool?
I think let's look at the CME Stake Watch.
Okay, so if you guys are wondering what we're talking about, this here is the CME Fed Watch tool. which is basically showing us the probabilities that Fed funds traders are right now factoring in for a hike. No, this is the other way around. This is wishful thinking, right? So this is not the hike. The hike is right here versus keeping interest rates the same.
Exactly. And a couple of weeks ago, we made a bet, and you said, you know what, the Fed's going to raise rates in November. And I said, I don't think so.
Yeah.
Right now, it would be a shock to the market if the Fed were to raise.
Yes, and we bet a box of steaks.
We did.
And so this is the probabilities that you're getting the box, and these are the probabilities that I'm getting it.
I like ribeyes.
Deal.
Yeah, that works.
Okay, so since we're already here, let's also take a look at the probabilities before we go to our positions and see if anything has changed there. This morning when we checked, nothing really too dramatic. I mean, right now, traders are still factoring in that somewhere around May or June, the Fed might start lowering interest rates.
Sure, and I think that this is going to be the focus now because there has been talk that the Fed will raise another quarter point this year, but I really think that that's off the table now, especially with those longer dated interest rates starting to pop, right? Some Fed members have said that essentially has done the work for the Fed, not needing to raise another quarter point. And I think that is true. And that's why I don't think the Fed's going to raise this year.
Yeah, and I have the 2-year and the 10-year up. And this is where we have this inversion that occurred last year where everybody was saying, okay, that is a sign of a recession where the 2-year interest rates are higher than the 10-year. And I mean, right now, the 10-year is going up quicker than the 2-year because at some point we need to see that the longer dated interest rates are actually trading higher than the shorter ones.
Exactly. And that's, again, where it's kind of done the work for the Fed because for a long time, interest rates were playing catch up or yields were playing catch up to what the Fed was doing. And that's why the shorter term interest rates were spiking quicker.
Yeah. All right, let's take a look at our positions and the new trades that we took this morning. So, first of all, looking at a few of our positions, there is CSIQ, our little buddy, hanging in there, hopefully providing us with an opportunity for a rescue mission and then start rallying. That is the plan here. So, we're looking at a possible rescue mission if we stay in this lower range.
And option number one is to just see this rocket higher, which I'd love, but reality, probably not. So hanging out around this level is the next option that I like, and that's where a rescue starts to make sense.
Today, up 1.4%, which again, super interesting because rates are going up, and usually that's hurting CSIQ, but here, rates up, CSIQ up, fine, we'll take this. All right, Devon Energy is actually the next one that should be on the list, but as you see, it is no longer because I did get called away on Friday. So this is where I sold puts at the 45 level, got assigned, sold calls against it, and on Friday got called away. Beautiful, super easy wheel trade.
Yeah, nice quick trade, and I know that you would have been open to holding this for another week or two or longer to collect premium, but it did have that spike with crude oil peaking last week.
Yeah, because on crude oil Friday, crude oil had 5% run up, so that is the best day since May or something like this.
Or March.
Or March. Hey, they both start with
them.
Yeah. Okay. So NEE next on the list, and NEE right now has a nice, almost V-shaped recovery here. Down a little bit today, which is surprising given that the overall market is up, but hanging in there. And it's not too surprising if we see after this pretty impressive move that traders are taking a breather on NEE.
Exactly. To some extent, I do believe that this drop was a bit of an overreaction, but it was also a response to guidance in the future and what the company expects growth-wise. So part of this drop is you have price discovery traders trying to figure out what NEE should be worth. A V-shaped recovery would be fantastic. I don't expect it, I'll take this, and it looks like it was a bit of an overreaction.
Yeah, and look at this. I mean, just over the last 6 bars, which is a little bit more than a trading week, up 18%. So this
Not
is
too
where
bad.
kind of normal that today traders are taking some profits here, and we're a little bit down. So we're okay with this. PNC is doing kind of exactly what we said it would do, doesn't it?
Yep. So based on our earnings analysis tool, the tool said, hey, likely that PNC will beat on earnings, which they did. Likely that the overnight reaction or the first initial reaction to that earnings is going to be negative, which it was. And then likely that on the 7th day, the reaction will be positive. And right now it's holding up, looking okay. Not to mention that the move today is a little bit distorted because there was a $1.55 dividend for anybody holding shares this morning. You are now entitled to a dividend being paid on November 5th. What happens on the next dividend date is that the stock typically drops by that amount. And for a majority of the morning, we were down around $1.60, $1.80, somewhere in that zone. So a small loss on the day, considering that $1.55 dividend, which is normal for that scenario.
Yeah, I mean, right now we are even positive, so we are up 0.25%. Plus
That's a
adding,
nice move.
yeah, exactly, adding this $1.55. So nicely up here. We'll take this.
Yeah.
And we'll take the $1.55 dividend.
Sure. Why
Because
not?
we were owners of PNC shares today.
Exactly. It's paid a decent dividend to us.
Yeah. All right. UPS.
I'm loving this.
I love this too. Okay. So let's talk about UPS. So UPS, you got assigned at 165 because you traded a bit earlier. I joined you a little bit later, and I traded the 157.50, got assigned, and then this morning I saw an opportunity of selling calls against my existing position at 157.50.
Yeah, and I really love the position you're in. Great cost basis, nice premium today. And I actually had the opportunity to sell calls for next week's expiration at the 165 and get 30% minimum. I think it was $1.65 and even got up to $1.85.
Yeah.
But I haven't, because I do think that there is the potential for us to drift higher this week. And also, you look at that range that we've seen, now we're breaking outside of that range.
Yeah, we break out of the range, and we have earnings coming up next week, one day before options expiration, and that is inflating option prices.
Exactly.
Because, yeah, not for this week, but for next week.
Exactly. You could look at the expected move, and you see this week's expected move versus next week's. And this week's, it's about 2% up or down. That's one standard deviation there based on options prices and where it's trading at, versus 5% plus for next week, and that's because of that inflated option premium.
Right, exactly. And this is why I decided to sell it now this week, because
Sure.
I do have a possibility to roll. Just before we started the show, we have looked at it, or I've looked at it. If I would roll my 157.50 right now into next week, I would get $3.
Exactly. And so the best scenario to roll is typically when you're coming up to the expiration that you've sold and the stock's trading at that strike, or you have an earnings situation where a current week is expiring and there's all of this extra premium because of earnings for the following week.
Yeah. So, loving this, collected $1,980 in premium. I'll take that. All right, Goldman Sachs. That's another interesting one. But before we talk about Goldman Sachs, is this helpful at all? I mean, if it is, do us a favor and give us a like. And if you see enough likes, we'll also show you the trades that we did. Just notice we need to stop banging on the table.
Yeah, that's you.
It's me. Okay.
No, normally it's me, but maybe it is me.
Hey, even if you like that, hit like. Okay, so let's talk about Goldman Sachs. That's another super interesting one, and we have to talk about the 312.50 level.
Exactly. So I was assigned shares at 312.50. We had that drop, and then it popped a little bit. I was able to sell calls, get some really nice premium. Going into today's session, I had a really nice break even, and I had two scenarios. One, I could stay with the trade and sell calls, or I could close the trade. Now, I decided to close the trade because we do have earnings tomorrow before the market open. And earnings does you take on additional risk going into earnings. There's always going to be the potential for the stock to move more because there's uncertainty. We don't know what earnings will be, and more importantly, we don't know how the market will react.
Yeah, and talking about the expected move, I mean, by the end of the week, you could either fall all the way down to 303 or rally up. So this is why, what do you do?
Well, I decided to sell right at the open. For me, the line in the sand, if I could get out at 312.50 and just get all of that premium, but I decided 313 was a nice level to get out at, so I just put in an order to close at 313 at the open, and I actually got filled at 313.18.
Nice.
So a little bit higher now, but that was the high of the day for a large part of the morning.
Yeah, and I mean, the great news with this trade is now that you're out of it, if there is an earnings reaction tomorrow, then there's another possibility to trade it, but to reset at a lower strike price. Because if tomorrow really we are falling down towards 300 and we can sell puts at around 304 level, that would be even better.
Exactly. And I could have sold calls, maybe had $4, $5, $6 on the call side, but my upside was limited, right? Because if the stock rallied and just took off, I would add that guarantee on the call side. But here, if it drops, I'd have that exposure. Yeah. So I like the idea of taking another shot at this and not having that extra risk if I don't need to.
All right. So we have one more trade for you, the trade that we took this morning. Because, I mean, I got called away in Devon.
Yep.
You closed your GS. So, therefore, we had another position in our portfolio, and we decided to another trade. Want to see what it is?
Let's do it.
All right, let's do it. So, this morning, what we saw popping up is IWM. This is the Russell 2000 index on the Russell 2000. Not as well known as the SPX, the SPY, the QQQ, the diamonds, but I mean, it exists.
Exactly. And so this is an ETF that we've traded multiple times. We've made some money. You look back there, and there's some nice support going back to last year. Recently, it was higher, and that's why we haven't been trading it. But coming back to some longer support levels, I think that there was a nice opportunity there for a wheel.
Yeah. So this morning, the 169 strike price popped up, which was kind of fantastic because we added this to the calculator, looked at it. So here's the UPS trade that I did, right? So the $1.65, collecting $1,980 in premium. And here with IWM, we sold the 169 strike price for 80 cents.
Exactly. So nice little premium collection. Happy to get assigned at 169. There was a little bit of a push lower, but now it's up, and we'll see if we could even close this early this week.
Yeah, I mean, this is great because right now it is trading at 51 by 52, so we are already up nicely. I mean, not quite 50%, but probably 40%. And if we can close this trade today or even tomorrow with 80% of the max profits, we'll do it.
Exactly.
Because it's earnings weeks, so we might have some earnings plays coming
exactly.
up. So lots of cool stuff happening. All right, let's take another look at the markets and see of what's happening here right now. So on a 5-minute chart, the S&P, I mean, right now trading at session highs, pulling back a little bit. Dow the same, trading at session highs. And we have the NASDAQ trading at session highs. So we'll see where we go from there. What do you expect for the remainder of the day for the S&P 500?
I wouldn't be surprised if we pull back just a little bit, but stay up nicely for the day.
I believe so too. Right now we are up 1%. I believe that we'll probably be up between 0.5 to 1% for the day. Probably, if I would have to bet on anything, 0.9%.
All right, let's see.
Well, we will watch that from the beach because we're enjoying time here on Cayman Island. If you enjoyed the show, do us a favor and click like. If this is your first time here and you enjoyed it, you might want to consider subscribing, hit the little notification bell. And if you thought that this show was particularly great, share it with a friend or wherever you want. And then we'll see you again tomorrow.
Happy trading, everybody.